Are we back to normal yet? I mean, can you tell an EM government, a finance minister, we spoke to the Indonesian finance minister the other day, can you tell them we're back to normal in the Crescenzi space?
No, we do think there's further to go on the Fed funds rate. That'll probably get toward 3%, if not over it. We were holding a conversation with one of our advisors, Ben Bernanke, a couple weeks ago after the Fed's latest meeting. I asked him the question about the emerging markets. To what extent might it impact Fed policy? Do you think that the stress there is the sort of thing that could slow them down? He said doesn't think so. And Pimco believes as well that most of what we're seeing in these various countries, Turkey, Brazil, Mexico, et cetera, it's more political than it is economic to an extent. What I mean is it's not related to the Fed, and we shouldn't believe that the Fed will slow its rate hike path down because of what's happening in the emerging markets just yet, until it spills over, until it becomes something bigger to broader markets.
Tony, does it, however, emerging market falling out or around emerging markets, can it hurt world growth? And is that something that the Fed would look at?
For sure, but global growth this year nominally, which means real plus inflation, will be a little over 6 based on the way the IMF calculates it. That's about the same as last year, and we would project that will be the figure for next year. This is up over percentage points from a couple of years ago. This is the sort of thing that can lead to gains in equities of double digits, because typically it leads to profit growth, and based on the MSCI World Index of low teens or so. And so the global nominal GDP story, driven primarily by China, looks intact despite the stress in the emerging markets now.